welcome to the Green Dream video series where we interview senior members of the responsible investment industry. Today, I'm speaking to Karina Funk, Fund Manager of the Brown Advisory US Large Cap Sustainable Growth Strategy. Thank you so much for talking to me today, Karina.
Thank you, Natalie. Good to see you. Thanks for the invitation.
So you've been described as a sustainable investing trailblazer and have been listed as one of Barron's 100 most influential women in finance over a decade. It's fantastic. When did you decide that you wanted to be a sustainable fund manager?
Well, I guess I didn't decide to be a sustainable fund manager, but I did want to be a fund manager. And I guess we can get to that. But so I've been in investing roles for over 20 years, and my career before that was as an engineer. And that experience is, I think, what really helped set my investment philosophy. I worked for large, this is a much shorter career. And I worked mainly on environmental projects for large global companies. And I noticed when I was implementing things like water conservation, energy efficiency, pollution prevention, things like that, that those projects were always material to the bottom line. More often than not, they would improve the customer experience, either by helping customers themselves save energy, save water, improve their efficiencies, or improve product quality. And when the successful projects were rolled out to a global operational footprint and those benefits propagated across a global customer base, that is what helped set my investment philosophy. I saw that these large, financially stable global companies could really move the needle on the bottom line for themselves, on the customer outcomes, on growth opportunities, in really setting competitive advantages, and therefore on shareholder value. So I decided that was a pretty neat insight that would be helpful as a capital allocator.
Yeah, fantastic. That's a really interesting background that you bring. And looking at the area where you're investing currently, what are the sustainable risks and opportunities in the US large cap market? And how would you say that differs from the rest of the world?
Well, gosh, around the world, US or otherwise, there's certainly no shortage of sustainability risks. But there's also opportunities. On the risk side, all I have to do is open the newspaper, right? Whether it's climate or justice or access to healthcare, no shortage of truly intractable some sustainability challenges. So the opportunities to solve these critical challenges, I think, are some of the best opportunities for investment, frankly, in any asset class. So we see opportunities for what you can think of as better, cheaper, cleaner, greener, more productive, more efficient across just about every area of the economy. So take a sector that might be sort of orthogonal to what many might think of as sort of a pure play, environmental or sustainability sector. So take healthcare. If you're a healthcare professional, obviously you have a lot on your plate right now, and you're also worried about sustainability, whether you call it sustainability or not. You're worried about, how am I going to feed my patients without making them more sick? How am I going to get all that clean and hot water, sanitize all that medical equipment, deal with all this complex medical waste in an environmentally and economically efficient manner? So you can build a diversified portfolio that addresses these critical needs. And these challenges, they're not getting any easier. We're not going to need less access to clean water, to healthcare, et cetera. So those are some of the opportunities. And you asked the difference between US and global. There definitely are nuances, but these massive sustainability challenges that create secular tailwinds, frankly, for investment and the opportunity to solve for these challenges, those exist globally.
Fantastic, thank you. And when you're speaking to some of these firms, when you're engaged in conversations, what are the key questions that you ask in terms of ESG criteria or diversity criteria? And are there anything that throws up red flags for you?
Well, so we do, I think, a really thorough job of understanding the sustainability risks and the opportunities. When I mentioned at the beginning that I really wanted to set out to be a fund investor, not necessarily a sustainable fund investor, that means that for us, the sustainability lens is just indelible to understanding a company's fundamentals. Like, we just think that that sustainability lens just turns over more rocks, helps us look at more information to arrive at, real conviction in answering the basic questions of, how does a company make money, and do we want to own it for the long term? And long term, that is the key that I think requires a sustainability lens for any investment manager. And so the key questions that we try to get at are that framework of the risks and opportunities. And we've been doing this. My co-manager David Powell and I, we've been running the strategy for 12 years, and since the beginning, we've had this framework where we seek to understand the ESG risks. That's very important. But I will say that there's not enough sort of staying out of trouble and risk management that will catapult a company into long-term sustainable growth. So what makes our company special is that they're playing offense. They're not just playing defense with their sustainability strategies. They're improving their financial position. And the way we see evidence of that is this framework that we call Sustainable Business Advantage. And we keep it simple. We need to see evidence of these sustainability strategies literally flowing through the financial statements. So the three, what we call Sustainable Business Advantage drivers that we look for are first, faster revenue growth. So examples of that are a product or service that helps those customers, like I said, do more with less, be more productive, more efficient, save money. And saving money never goes out of style, no matter where we are in a macroeconomic cycle, or frankly, if you can spell the word sustainability, it's just a persistent source of value creation that becomes a revenue growth driver for our companies. The second SBA driver is cost improvement. And it's those efficiencies turned in on the company itself. You see that in very disciplined operators that really manage their process inputs, squeeze out efficiencies, and improve their yield in the process. Why do we care as investors? Because you see it in their margins. So sometimes this research helps with a thesis of a long runway of margin expansion. And then the final SBA driver is what we call enhanced franchise value. And you can think of that as really the value of a brand or customer loyalty. And you see that with the increased market share, really, that you see in the healthier for you, organic, or sustainability, the elevated characteristics of some products. So in our experience, those three SBA drivers are the way that companies are playing offense. They do have to be managing their risks. They have to have a handle on labor relations. We have to understand if they have good governance, et cetera. And we do a very, very thorough job in understanding that. But for us, all of this research that I mentioned, it's really company specific. It's not about a subsector. It's about a specific business model. There's a context for every company, and their sustainability risks and opportunities will really be unique to that business model.
Mm. Yeah, it's really interesting to hear you talk about these things being embedded right across the financial revenues, because I do think that this is a theme that's going over the next year or so, where investors will be looking more at concrete evidence of these companies actually doing what they say, what they're promising that they are doing. So yeah, it's really good to see that you're very much on top of that. So do you still think there are misconceptions in responsible investing? Do you think that there are some challenges that still remain around some of those misconceptions? And have there been any positive changes over your career in the way that the world looks at responsible investing?
Well, I would say that the category of responsible or sustainable investing, it's often sort of talked about in one bucket, and it's definitely not monolithic. I mean, at best, that's inaccurate, and at worst, it's sort of undermining, because I was just saying that we think the sustainability lens is just useful in understanding a company's fundamentals. So we didn't set out to start a sustainability strategy. We set out with a philosophy, a process in the team that we thought could do well in the large cap growth space. And so just as any traditional approach to investing can impact returns, positively or negatively, it really just comes down to the why and the how. So, as this industry has evolved, it's really neat to see how far we've come from, at first screening out the bad guys, and now so many different approaches to ESG integration, including engagement, shareholder advocacy, and also just integration into the fundamental investing process. So I think that I'm hoping that this high bar of expecting ESG data to make you money, or there was the prior misconception of losing you money as well. That's not an expectation we even have on any other fundamental factor. So for example, you wouldn't expect me to create a portfolio of like the highest free cash flow companies. I mean, because they might not be reinvesting in their business. That might not be a good long-term investment. And so by leaning into a particular ESG characteristic, again, that won't automatically make you money or lose you money. Like I said, it's really particular to the business context. So in terms of positive changes, actually, I think my number one question used to be, well, isn't this going to, aren't you going to sacrifice performance? And the good news is that I really don't get that question anymore, not just because of our strategy. We are in good company. The data is there. There are several managers that do high quality ESG integration, or various even heterogeneous approaches to sustainable investing, and have been able to outperform for 3, 5, 10 years. And I think that just goes to show that an investment philosophy, whether it's sustainable or not, you just have to start with a good investment process, understanding what makes for a good long-term investment, and sustainability lens is a value add to that process.
That's fantastic to hear that the questions have moved on about the sacrificing of performance. It's really good. Well, thank you for sharing your insights with us. We always end the Green Dream with this question: what is your favourite sustainable drink or snack?
My family, we are all about smoothies at breakfast, as a snack, as a side dish, and that's a good question in terms of the sustainability, because you could think it's just healthy for you, but there's a different layer of analysis, if you want, in terms of sustainability. And we do try to lean into non-dairy, or the nuts that use less water, and pack it with protein with different plants. So we enjoy it.
Right, that sounds really delicious. Okay, well, thank you again for your time.
Thank you, Natalie.